Having your levels matter. Having indexes that move according to or adverse of the market that you're trading is extremely important to have. Having confluences such as RSI divergences, having some top gainer confluences, maybe top losers to look for longs and etc. Things that are helping you get into a play. Things that are helping you even begin to form an opinion on a play. That's important. I've gotten some feedback that people enjoy the orders that I put up, and I've been doing that for years. The first thing that I do as a trader, solely me as a trader, is I like to look for limit orders. I don't know if the limit order is going to hit. If those limit orders hit, then I know that something happened in the market that then led to that price action to be had. I'm reading a good book right now, Technical Analysis of the Financial Markets. Very, very good book. And one of the first things that is highlighted in the book, I'm going to read it here for you guys. The technician believes that anything that can possibly affect the price, fundamentally, politically, psychology, or otherwise, is actually reflected in the price of that market. How I take that is, even if price hasn't moved to X destination just yet, because that's where it's going, right? Like, let's say I'm in a short right now, okay? And actually, this goes perfect with what the indicators are looking at as well. We had our levels, we had our reasoning. There's a potential lower high push into resistance, right? When price was up here, I was looking at limit orders into this sweep here at 63,740, right? That entry was slightly front ran. If you're a platinum member and you've accessed the limit order bot, you saw that there was a limit at 63.9, which tapped perfectly, and immediately after it tapped, it went in profit. All that being said, price was above where that limit order was. Something happened, whether it be resistance, whether it be economics, whether it be an event, whether it be news, whether it be Trump speaking, whatever the case may be, that price rejected from point A to point B. And I, as the technician, right, decided to put a limit order in that place. If it fills or not, it doesn't matter. The point being is that you put a limit order in that area for XYZ, whatever the reason was. Then price reacted from that point to this point for whatever reasoning. Price is going to react from X level because of whatever reasoning. You as a technician have to make sure that you're getting to those plays accordingly and that you're setting your limits, that you're entering on market after reaction for whatever the case may be. And that's all up to the technician. So I wanted to really brush up on that really quick. We were looking for a pop into these highs to then create a lower high. The reasoning that I was a little bit more convicted into this, and the reasoning I put my invalidation slightly below the high, I didn't put it over the high, because I didn't feel like you needed to do that. I felt like if it swept the highs, the play that I'm looking at is technically invalid, and we shouldn't even be looking for that. We got a sort of double top scenario here. Even though we didn't technically reach the top, we still have that sort of opinion in there being a potential lower high and whatever the case may be. Any pop intraday should be looked at as continuation, and we're seeing that sort of reaction happen right now. It does not matter why the reaction happened, but the suspected reaction is happening. Thus, the technician's opinion was correct. And these are the sort of things that I'm preaching in my mind, sort of looking at it from a third person aspect of things. I like doing that. I think that it's worth doing that in this market. It makes things a lot more engaging for you as a technician, as the analyzer. And it helps that when I open up my charts, there's an indicator level that's literally highlighted for me, right? Highlighted for me. The reactions obviously make a lot of sense. It does not have to play all the way to my TP. There's also a scenario where we sweep these lows and we continue up off of it, right? We sweep people that were in the entries from this morning. People that canceled their orders are not going to get filled because they canceled their orders, and so on and so forth. Let's say point A is making the plans. Point B is setting your alerts. Point C is setting the limits. Your final destination, which is point D, is reactions happening. So that's kind of what I wanted to go off of and what I've been reflecting on. Whenever I have a missed read, whenever I fumble or cancel limit orders and then flip the other entry, like we saw this week, clearly was not on the right side of things, even though my analysis of the situation was fucking perfect. That goes without being said. I don't need to collect clout for that. You still need to learn from those losses, and you need to react according to that And understand that there's another plan. You don't have to be so shy about hopping back into the market after a misread. You need to be willing and able to take that loss with grace and move on to the next. You should look at the losses just like you look at wins. It's like it's just another day in the market. It's just another position.
I want to highlight on that too, because you only lose if you don't learn from, what you're taking. So like you said, you had such a good read, and you were looking at this level prior to the move playing out. But one thing that I noticed that you did very well on this trade is, yes, your analysis was perfect. Maybe it didn't play out initially, but you adapted, and then you entered in based off of your confirmations while price action was still developing. You can see here too, he didn't get in on the initial pop up, but what he did is he adapted, started seeing closures below that resistance level that's indicated on the Woodsbot indicator, and set a limit for a bearish retest under that resistance level. So I kind of want to hear your thought process. Yes, you may have had a little bit of a misread earlier, but you again adapted. How did you adapt to that? And what were the signals that you saw to get back into the short?
That's a great question. A lot of it is repetition. A lot of it is me in the market every day. So I understand like the tendencies I have as a trader. If I take a short, it's for a logical reason. If I take an L on that short, I pay attention to that invalidation. I pay attention to that entry because eventually price will react up or down from my entry or my invalidation more often than not. Happens almost all the time with my trades. So I take that with stride, and I like to hold myself accountable to that. And really, it goes in line with potential lower high, a deviation of the area that I wanted to short originally. Let's say if I was in a long from this level, then would I move my invalidations up, and how would I feel about that? So a lot of it with this specific play, and I had this opinion yesterday on the market, but this play goes in line with the repetitions in the market as well as my confluence. We've closed below a specific area that we need to reclaim or reject from. So I'm anticipating that we're not going to pop higher than this just yet, and I'd be able to reach a one-on-one play here. And that's exactly what we got if we were able to enter in on the median end of this little range that we're trading in. Because this can very well act as a range, meaning we could hold from here, pump up to here, reject from here again, pump up to here, reach this level, reject from there, and so on and so forth. So yeah, to answer that question, repetition in the market, having tendencies as a trader, and me taking trades the way that I do, understanding extremities.
No, I mean, like, that is a beautiful fill too, pretty much damn near Pico. And I was looking at your corner, obviously. I look at your trades and analyze them every day. But I was just like, I can see you adapting to it. I could see that, okay, yeah, if you missed the initial pop, all right, you see that we're starting to close under levels. You're setting the limit. You're anticipating the move to have to be made, and you're executing based off of that. So again, like I commend you adapting to current price action and the waves of the market.
Yeah, I appreciate it, bro. And that's all it really is that. There's a lot of tides in the market that are going to change, and it's up to you as the technician to be adapting to that. And that's what I think we do very well here. It's important to, have your confluence indicator. Like, I can tell you there's, all you need is indicator, but that's not the truth. You need time in the market. You need to take plays. You need to see how price reacts around those plays if you're wrong. You need to see how price reacts around those plays when you're right. You need to see the confluences that stack up in any given range the more you play it. You got to look at the higher time frame to the lower time frame. When you're playing intraday plays like this is exactly what it's an intraday play. It's not meant to be a swing, which if you miss extremities like this, then these type of plays aren't meant to necessarily be targeting swings, but these smaller plays at extremities can lead to, if you enter in the right position, can lead to swings. But you got to make sure you're taking profit. If you are the type of trader that's trying to swing every extremity and you aren't taking profit, you're round tripping a ton and you're leaving a ton on the table. The reasoning behind the long yesterday as well, like we had the lows here that were swept. And I was shorting yesterday at 63.8 right here. I was long right over here, but that was over here. So I was underwater on that long, and then that long ended up flipping up. I closed at break even, and I took the short here. We piled up a demand level there, so that short was invalidated. Unfortunately, I could have closed it at or around break even. The way I like to see things is like, either we're going to hold my short level or we're going to reject it. We ended up holding it first, and now we're looking to come right back to it. This is where the decisions are made. So if we're going to hold this level, we should go higher. If we're going to lose this level, we should go lower. But again, you can't be assuming we're going to collapse right from this point. You got to assume that somewhere around the previous point of liquidity where price held to take us up to the next highs is where price is going to react next. So at this point, you should already move your stops and take profit, because we've already been consolidating within this range for quite some time. The more time passes in this tight range of consolidation, the more likely is a move to happen. And it's happening at the top end of the range at resistance, which is usually where price likes to resolve in moves up, right? Like let's say we were rejecting like this. Price is going to look to resolve at the low end more often than not, because the trend is to the low end. When price is looking to like reverse here, you saw, you're going to contest either direction.
So where are you looking next, Woodsy? So you're short here. Your overall bias right now is intraday short. What is your higher time frame analysis? Where are we heading next?
I mean, in terms of higher time frame, like, you got to take it with stride right now. Higher time frame is not rewarding like quick entries. So I'd have to say, like, from an intraday perspective, I like the demand we're trading in right here. It's the exact one that I wanted us to hold and reclaim on this deviation, of course. We held a higher low there. If we're going to drop from here, we should be breaking these lows. I have a target at 62.4, 62.8-ish. I think there's a possibility of us holding that CPI wick. I know it wouldn't look great, especially like on the 3-day. It'll look super weird with this candlestick here being like super aggravated, where it came down, retested, and held. It'll look really weird if we retest another 3-day candle right down here and it'll look kind of heavy. That being said, it's not out of the realm of possibilities. We've still closed on top of this demand candle. We closed within the indicator zone, so it's not out of the realm of possibility for us to come down into this trend again, hold another higher low from that point, and go from there. If we don't hold this level, I think we're going straight down to the 60K level. So I have two opinions for that. If we close on, I think to summarize that, the point of us holding is 62.3. As long as we could hold that, I think we'll see upside towards 67 and 68. If we lose that level and we lose this trend, I think we're going to trend towards the lows. I don't think that we should see a reclaim at this line anymore. I think that if we're going to lose these lows, we should lose it all together into this area of demand and probably look to sweep this flat candle low as well. So that's pretty much what I got. Intraday, on a higher time frame perspective, I'm still under the assumption that until we flip this level and retest this level and see what happens there, there's a possibility that we still see lower. And I'm keeping my eyes open for that possibility. Our indicator zones are moving up slightly, and I do like that 54K zone a lot. I like that a lot. But we're seeing a lot of turbulence along the way. We're seeing choppy price action along the way. You know, hype, like, look at this shit. Like, hype literally rejected the 1-day price action fucking brutally. So we're seeing Bitcoin hold and alts get fucking wrecked. I mean, the deeper we go onto alts like this, the better risk to return you get. The problem is we're rejecting hard. If BTC were to reject a little bit, I think that alts would get smacked harder. And we're seeing a turn up in BTCD come into fruition here in line with what's happening. If we see a turn up on BTCD.D and we see a rejection on BTC, you're going to naturally see a harder rejection on alts, which is why I want to be a little bit patient with placing limits. I put a limit here for Zcash because my read on Zcash has been fucking phenomenal. So I like this little deviation play right here. I like that we closed on top of the indicator levels 2 days ago, yesterday as well. I like that. I like that we had this heavy candlestick here, so there's no immediate candle wick that we swept on the 1 day. And I think that we could target this level up higher for Zcash. So I think there's more to gain from stronger outliers like that. Hype as well. Hype's just a little bit weirder because it looks like we're distributing around here. Even though we're still holding compressed higher lows, it still looks like we should have held that 6270 to 6180 level. That has been a key level, here. You could see intraday. Well, intraday was actually a perfect retest for a rejection. We had these levels previous. Yeah. That was a perfect rejection, honestly.
That Monday sweep alert that went out in the Monday range bot, like if you would have caught that, you would have caught a nice RR play.
Oh, bro, literally you would have caught a low sweep to a high sweep. It was perfect either way you played it on Hype. Hype literally gave 2 easy triggers for you to get into a trade, that being the exact range that we were playing in this week. And it happened within 3 days. So right here, I'm on the Blowfin chart. It didn't sweep on the Blowfin chart. On the Bybit chart, however, you could see how we printed the Monday low right here on this wick. And then we swept that low right here. So after we confirmed the Monday low range, we swept that low and confirmed on this candle. That's a sweep of the Monday range. We're sweeping it again. And then we pushed all the way up to the highs. We swept the Monday highs. I mean, perfect now, literally. And rejected hard. Right into my reclaim level too. Like, I have my own areas of interest as well that I like. And all this area is a flip level. I said that we have to flip this level, and until we flip this level, we're not going to go higher. Look how perfectly we just came up into it and rejected. It's like, bro, it does not get simpler than that. You don't have to have 100 confluences. This was one confluence you could have looked at. And I guarantee you, at those sweeps, you would have had your divergences react. You would have had oversold, overbought. I can guarantee you that. Like on the half hour here, you saw overbought or oversold, right? You saw an RSI divergence within that level. Hourly as well, you saw it into oversold territory. 4 hour as well, tapped to oversold. Obviously, the higher up you go, you're not gonna have the oversold, but you could even see on the adverse right here, you got into oversold territory with the Monday range sweep on the hourly, half hour, obviously on the lower time frame. So yeah, guys, just want to kind of show you that. And how I look at things. I mean, I think that it's important to keep looking at the triggers you're looking at. Keep practicing, because we're at a point in the market where you can make a lot of money and you could learn a lot, or you can lose some money and learn a lot, or you could lose a lot of money and not learn at all. So that's pretty much what I'm looking at right now. Yeah, let's get back onto your chart. I'm interested to see what you have planned out for BTC.
Yeah, so I'm on BTC right now. And again, I just want to highlight, because we just previously went over my USDTD analysis, but I wanted to link the tweet basically indicating the short bias that I had. Again, we just went over it, but I just want to show you guys the inverse effect of having a bias on USDTD and seeing the price reaction on BTC, right? So we're looking for shorts due to the fact that USDTD was at support and still is at support on a high time frame confluence zone. Not only that, where we're getting bullish divergences on USDTD as well as bearish divergences, but you can see that when we started getting those bearish divergences on the link of the tweet, we started seeing that rejection, right? And now we are closing under resistance. Not only that, we have bearish divergences piling up here. We have bearish divergences piling up on the 15-minute. We are entering that 4-hour oversold region, not quite hitting it yet, but we are getting there, and we're getting bearish momentum shifts. So, flicking back and forth between USDTD and BTC, like we discussed last week, is so important, just discussing a bias. Let's go over to BTC, and we'll look at the short here. So again, what I'm doing is when I start seeing these levels pop up on the indicator, again, I'm setting alerts at pretty much every single level, support and resistance, right? So if we get a pop up and we get a pop down, I'm getting alerted based off of that and when we're coming into support or resistance. So it's super important, guys. I think the way to really measure yourself as a trader is really how many alerts do you have set at key levels. If you're not setting alerts, then you're not being, notified when we are at key levels. That's why I recommend, guys, always to be having the alerts set inside of the Discord and making sure that you guys have collected your roles so that you are alerted at key levels, key areas of interest, Monday high sweeps, Monday low sweeps, resistance levels, oversold and overbought divergences. You're being alerted on when the market is at key levels. But yeah, I was, for BTC specifically, again, I was looking at USDTD. I was looking at these bearish divergences pop in, shorted based off of the bearish divergences. I've been holding the short for about 2 days now. Nearly got stopped out close to. Luckily, I didn't. But as soon as we started getting those daily closures below this high confluence zone, that gave me confidence to hold the trade. Well, one thing that I did that it may be a mistake is in today's price action, I started to notice bullish divergences piling in here. Now, on the 30-minute RSI here to the right, you see the bullish divergences piling in, and that's what fueled that pop up and that retest where Woods ended up setting a limit and getting filled nearly to the Pico dollar. So when I started seeing those bullish divergences, guess what I started doing? I started to take profit, move my stops break even, and watch how price develops. Not only that, but as soon as I saw Woods start getting into a short, I was like, okay, this is giving me more confidence to hold to key levels. Now on the inverse side of things, where am I looking to long? Again, I'm setting alerts at every support level. I'm carefully watching the RSI to see how it develops and executing based off of my analysis. So I set alert at 63. If we start getting bullish divergences on lower time frames, I may try a intraday scalp. But my main region, just like Woods is that 62 zone. I do believe when we enter that 62 zone, we're going to be extremely oversold on the RSI on lower time frames, but we're also going to be at a key level on the 4-hour time frame. In an ideal world, when we tap that 62 level and I get alerted, I want the RSI to be down here in the 30% zone on the RSI. Again, if we are oversold, that will give me further confidence to take the trade and actually try to swing it rather than to scalp it. So again, guys, based off of the USDT analysis, I am short. My bias is short still. I'm riding the short down and basically just getting prepared for the long side at this point. Let's go over USDTD again and just take a look at some of the analysis that we longed on hype and the reasoning why we took that long on hype. I briefly went over it earlier, but we're going to go over it again, is that I set those alerts at this resistance level on USDTD. All right, I set those alerts. I got alerted that we were coming up, but as soon as I got alerted, I started to look at the divergences piling in on the RSI. You can see that we have a 30-minute bearish divergences, and that is the reasoning why I started looking for longs on altcoins. And now inversely, when we look at the hype trade, you can see that on hype itself, around this price action, we started getting bullish divergences. Now, if you flick between the USDTD chart and hype, down here, bullish divergences. On USDTD, there's bearish divergences on that chart. Again, adding confluence to my trade. I didn't catch a full, I caught a full 1 hour. I completely closed it out at like 1.1 hour around here at this resistance level. But again, this is a perfect example of how powerful these indicator levels are. I took everything off here, and you can see the reaction. Once we swept those highs, we swept right into a 4-hour bearish divergence. And guess where USDTD was at that point? USDTD was at support. Let's go to the daily time frame. Let's close this. USDTD was at support with lower time frame bullish divergences. So I closed out my long and started piling into BTC short. that's really just like kind of my analysis based off of and how I executed these last 2 trades. I only took 2 trades this week so far. One long based off of USDTD in a resistance level, and then I also took a short based off of USDTD being in a bullish level and having those bullish divergences.
Yeah, I love the way you explain that. Again, like repetition goes a long way. The more you do it, the better off you are. Whenever you could learn from people that are using the same confluences that you have or look at and you aren't trading, you could learn even from that as well. And I mean, even with your system and, all that stuff, you have to have a system that you're going to every day in order to find these plays and combine confluence to get into plays, have opinions on where you see the market going regardless of what's happening economically or what the president wants to say,
Yeah, it really comes down to going back to the basics and just cutting out the noise. I think that's the biggest thing, and forming a bias for yourself. Once you form a bias for yourself, then you can look at other traders and see their bias. And if it aligns with yours, again, that just builds more confidence. There's nothing more in life that I love when I get into a trade or if I have a bias and then I look at Woods' bias and it's the same. That, again, just kind of fuels me up to either hold my short or long to resistance or support. Now, one thing I want to go over too is that, we were looking at the 63 level as well as the 62 level. So when I get alerted that we tap into those support levels on BTC, I am going back into USDTD and seeing, okay, are we at the 4-hour resistance at 8.5? Are we at the 8.72 area of resistance on USDTD while we are approaching the support levels on BTC? So flicking back and forth, guys, I can't stress it enough how important it is to flick back and forth and look at both of these charts at the same time. Overall bias, again, I just want to go over and make it very clear that I am looking for short side. Until we start tapping into resistance levels on USDTD, that is when I'll start looking towards long side based off of the RSI, based off of resistance, based off of the alerts that Woodsbots are shilling out. But yeah, that's my overall bias. Again, guys, I set those alerts, and you don't even have to trade them, but set the alerts and just see and watch how price reacts. That's the type of repetition that Woods is talking about, is just sitting there watching the charts and seeing the story play out that you've developed beforehand.
I love that little tasting gem right there. What's up, Bray? Good to see you, my brother. Good to see you. So yeah, as of right now, I'm really just respecting what the zones and the levels have to say for me. When it comes to Woodsbot and the levels that we're flashing up here, it's a little bit up and down with if it wants to go long or short as far as swings go. We have an update coming for the limit bot. We have not introduced it yet. We haven't updated that for a few months now, and a lot of price action has come to that. Gives a lot more confluence to the bot, so expect that really soon. If you don't have access, make sure to get access now. Drop the link on how to get access right now, Gatolf, when you get a chance in the chat. And yeah, guys, I think that was a nice little short stream to carry you on through the week. I'll be on stream tomorrow as usual for a couple hours. I appreciate you, Dad. I think you do a phenomenal job with how you've been moving recently and how you've been analyzing things. I have your alerts on, so I pay attention. Anything you want to leave off with?
Yeah, just to piggyback off of the update, there's a lot in the works, guys, but the main thing that we're working towards right now is a massive update and restructuring of the limit order bot. So it's going to be a lot more high confluence, a lot of high confidence trades coming in rather than kind of just it being everywhere. We're going to really hone down on majors and high caps. That is first and foremost, and then introduce lower caps back in. But on top of that, we're working towards building a official tracker that tracks RR and tracks basically every trade the limit order bot takes, so that when it comes out, you guys are going to be able to look at specific pairs and see, okay, does the bot have a high win rate and high RR on BTC, or is it better trading lower alts, lower majors, BTC, Sol, ETH, Hype? And you're going to be able to basically pick and choose what type of limit order you guys will want, or the type of confidence that you guys would want from the limit order trades themselves. So lots of stuff coming. I'm super excited.
Let's get after it, fam. I appreciate you guys coming through.